The topic, Public Service Loan Forgiveness for Physicians, also known as PSLF, and everything else you need to know about student loans in the year 2022 and beyond probably. The last 2 years have been crazy. Out of all the parts of financial planning, I never would have thought student loans would have such a huge instrumental part of our financial plan builds. And that is coming from a CFP and a CSLP who only builds financial plans for physicians. So we knew student loans were going to be a huge part of everything we've done. And it was still crazy the last 2 years or so. So my goal with this video and the new blog post that accompanies this fantastic video we're about to embark on here is to walk you through all the pros and cons. How does the system work? What's new? What's old? What should we be looking for? What should we not be looking for? Because at the end of the day, I am still amazed by how many times we speak with physicians who don't believe that public service loan forgiveness will apply to them, if it will actually work, if they should trust the process, if they should not. We will walk through all of that in detail in this video. So stay tuned. That is all coming up next. All right, to get started, let's just go through some of the basics, right? Let's kind of do a student loan 101. So first and foremost, you got two types of loans. You have federal loans, you have private loans. If we're going to talk about public service loan forgiveness, income-driven repayment plans, that only applies to federal loans, right? So you got to have federal loans. Private loans do not pertain to those programs. We can still talk through them, but just know that whenever we're referring to public service loan forgiveness, income-driven payment plans, those only apply to federal loans. So with that, we're going to make that really the main focus today. One thing that we like to note here, we actually in the actual blog post, we bolded it just to get started, is many years ago, a lot of physicians would take advantage of the 6 months grace period. Now, because of these income-driven repayment plans, we usually tell most of our physicians to skip that, right? Get right into it. Start your payments, because those 6 months, those are 6 of your 120. And for most interns, your first year of medical school, or excuse me, your first year of residency, during medical school, your income was probably extremely low, maybe zero. You maybe had some side income here from a side hustle or whatever the case may be, but income-driven payment plans are based on that income. So if your income was zero or extremely low, your payments are going to be extremely low and very valuable to that 120 number. So with that, just know that there are two types of loans. You have federal, you have private. If you ever need to see an inventory of your federal loans, you can go to the NSLDS database, and that's where you can get your entire file of what those look like. Your private loans are usually easiest found on your credit report. So those are the two types of loans that you should be looking for. In the blog post, we get a little bit more detail on the different types of federal loans. I'm not going to get into that level of detail on the video, because I think if you clicked on this, you're likely here to learn more about public service loan forgiveness and or just learning about more of some of the options you have based on all these crazy changes we've seen in the last 2 years. All right, let's actually have a little bit of a break here and talk through the public service loan forgiveness overhaul, which occurred in October of 2021. Two major changes that occurred, especially if you're going for public service loan forgiveness, is this. Now, the key is you have to have your loans, if you have FFEL loans, which we call Federal Family Education Loans, they need to be consolidated into a new direct loan before October 31st, 2022. So you still have some time there, depending on when you're watching this. I'm recording this at the very end of 2021, but just keep that in mind. If so, your FFEL loans can now qualify for public service loan forgiveness. This has always been this unique point for a lot of our clients, because maybe they consolidated some to direct loan, because in the past for PSLF, they always needed to be a direct loan. But these FFEL loans were always kind of trapped on their own island, and we didn't want to roll them in, and we didn't want to restart the 120 clock, so we'd just say, you know what the heck, we'll just pay these off. Well, now, because of this new overhaul, that does not pertain anymore. So you can actually get those into a direct loan, and all those past payments on the FFEL loan, the Federal Family Education Loan, and Perkins loans, don't want to leave out Perkins loans, they're now included. And then also, any payments you made can now count as well. So it didn't have to be on an income-driven repayment plan. It could have been on a 10-year standard repayment plan. Long as you were making payments, it will count towards your 120. So those are two huge overhauls that occurred in late 2021. And those are also going to affect some of our more upcoming talking points here. So that's why I just wanted to add those in as kind of like a breaking news section here for our video. All right, next up, I want to walk through public service loan forgiveness. So in short, trust the system. Public service loan forgiveness does work. It will continue to work. And as time goes on, you will have more and more colleagues or individuals nearby that you actually hear these success stories. I know everyone loves bad news and they'll put it on giant billboards, 99.99% fail rate. That data that came out a year or so ago was just more or less because anyone that had loans for 10 years applied. They may have not have had direct loans, they may not have been an income-driven repayment plan, they might have all FFEL loans. Whatever the case may be, it makes sense that rate was so high. That number will continue to decrease, the fail rate, and the success rate will continue to increase. And you're already starting to see some of that play out here in late 2021. So, public service loan forgiveness. If you're not familiar with it, here are some of the main things you got to keep in mind. Main thing is you need 120 payments. All right, 120. They do not have to be consecutive. That's another big point where some people get concerned. They do not have to be consecutive. You just need to hit 120. Things to keep in mind to get to that 120. I highly suggest you certify every single year. So when they ask you to certify your income for your income-driven payment plan, certify your payments too. And the main reason being is it's much easier for HR to sign off on that form when they're down the hallway compared to across the country. And what I mean by that is we'll have a lot of new attending physicians that join us, and they had the residency program. Let's just say they're in Philadelphia now. Residency program is in California. Fellowship was in Chicago. And while you can still get HR to sign off on it, it's not as easy. They're not down the hall, right? You got to send it, they got to sign it, send it back, then you got to submit it. So every year you certify your income, certify your payments. Now, before October of 2021, they always had to be direct loans. You still want them to be direct loans, but if you have other FFEL loans or Perkins loans, you still have until October 31st, 2022 to get them into a direct loan, and those payments still count. You also want to be an income-driven repayment plan, which will be my next section. I'll walk through income-driven payment plans next. But even there, with the updates from October of 2021, any payments in the past will still count towards your 120. But you are going to want to get towards an income-driven payment plan sooner than later. It's likely probably the most beneficial for you, especially if you're going for public service loan forgiveness. So just keep that in mind. All right, next up, income-driven repayment plans. For the most part, 3 are in play today. Pay, P-A-Y-E, repay, R-E-P-A-Y-E, and what I call old IBR. There's also a new IBR, but for new IBR, you have to be a new borrower as of 2014. So essentially, you probably could not have started undergrad. You would have started undergrad in like 2014, which that group is probably not active physicians just yet, if I'm doing my math correct. Depending on where they started, right? Because you have 4 years of undergrad, you have your medical school, you have your training. So I guess it's getting close. So new IBR could start to become more popular, but for the most part today, assume it as old IBR, pay and repay. And for most, it probably comes down to pay versus repay. I always say pays usually are the plan that we want to be in most of the time. And the reason why pay and old IBR are important is because they require financial hardship. So to get into those plans, you got to prove financial hardship. How do you prove financial hardship? Essentially, your income-driven repayment plan has to be lower than what your 10-year standard repayment plan would have been. And if it is, you prove financial hardship. So pay based on 10% of your discretionary income, repay based on 10% of your discretionary income. So pay and repay will give you the exact same payment if all the other circumstances are the same. Old IBR is unfortunately based on 15%. But the beauty of old IBR is you can still do married filing separately. With pay, you can do married filing separately. Repay, you can't. Repay is going to be, no matter what your situation is, if you do married filing separately, they still need to know your spouse's income, and it will be included in your payment. So when you look through these 3 plans, those are the 3 most popular. Those are the 3 that we analyze for all of our clients to make sure they're in the right spot. Repay, pay, old IBR. So again, cliff notes here, repay and pay are based on 10% of your discretionary income. Repay does not require financial hardship. You can get into repay even if you're making $1 million per year. Repays you can get into. Pay will require financial hardship. Old IBR will require financial hardship. Old IBR, though, is based on 15% of discretionary income. So just keep that in mind for payments. If we never spoke before, like I said, I usually say pay is the one where I hope you're in, but Repay actually has better interest subsidies. So if you're one of those individuals that's like, I don't know, maybe public, maybe private practice, maybe academic, Repay will give you a better interest subsidy. So if you're kind of sitting there just treading water, Repay technically could make the most sense on paper. Now the kicker is that what's your marital situation, because that can really make pay jump up. There's also no cap on Repay. I probably should have noted that earlier. So if you have two high earning physicians, Repay can get extremely high. There's no cap. The beauty of old IBR and pay, they are capped at what would have been your 10-year standard repayment. There's plenty good resources out there on all the details of those 3 plans, technically 4 plans. There's even another one called ICR. ICR is usually never used. The only time that ever would come into play is if you have Parent Plus loans. Parent Plus loan is the only one that works for the most part. So those are at least my cliff notes on the income-driven repayment plans that you could be looking to take advantage of. Your situation can kind of shift on which one makes more sense, but on paper, usually most of us are looking at pay versus repay. Old IBR can be a really nice help depending on your situation, but just keep those details in mind for the income-driven repayment plans. Next up is how to pay off your student loans. So now this is going to be for those of you not going for a forgiveness program. So public service loan forgiveness is the most common one. There are other ones out there. But this is going to be more or less, hey, I either have federal loans that I want to get out of my way, or maybe you're going private practice, or I have private loans I want to get out of my way. I'm just going to label this towards private loans because it's less messy. But on our blog post, we list these steps out for you. You'll see me do a little bit more reading here than I usually would. But step 1 is get organized, right? Take an inventory of what you have. What are the amounts? What are the interest rates? Is there accrued interest in there? For example, if you have federal loans, you likely have your initial balance, your accrued interest, and then your total balance. If you're one of those physicians that you're not going for public service loan forgiveness, you're going private practice and you want to get these things paid off as quickly as possible, one little thing you can do before you move them to a private loan is go pay off their accrued interest. Or pay it down as much as you can, because if you let that accrued interest capitalize, you now have negative amortization, meaning that for the duration of your new loan, the interest has now been moved into principal. So now you're paying interest on interest for the duration of your loan. So if you are one of those physicians or one of those individuals out there that are moving from, or you're planning to pay them off on the private side, because for whatever reason you don't want federal loans, you're not going for any forgiveness programs, just keep an eye on your accrued interest and see if you can get that paid off or paid down before you move that over. So step 1, get organized. Step 2 is look to refinance. Go get some quotes from SoFi's, from Laurel Roads, from First Republics, from Earnest, from Splash. Go to Dr. Dolly's student loan page, the White Coat Investor. Go to Physician on Fire student loan resource tab. I think that's what he calls it. And see what rates are out there. Usually also when you click on their links, you can also get some free money. So look for the lowest rate. The beauty of student loan refinancing is it's not like refinancing a mortgage. You're not worried about closing costs. You're not worried about all these moving parts. You're looking for the lowest rate. And this is also why you might be able to refinance your loans more than once in a short period of time. For the past 2 years, we've had some clients that have refinanced 3, 4, 5 times. Rates continue to kind of move down on them. So they say, well, heck, I'll just lock in a new rate. And they'll continue to do that. Or maybe get a similar rate, but let me rephrase that. They might lower their term. But they're taking advantage of these lower rates and saying, well, heck, I can now I can go from a 7-year to a 5-year. And because the rate came down enough that I can actually even knock off a year of payments by just refinancing. So just do some research out there. Once you know that, you can have a good payment plan in place for your private loans, but then also understand, what you're doing with your federal loans. Because it's not uncommon for some physicians, for some of our clients to come to us and they say, hey, listen, I'm going for PSLF for all of my federal loans, but I also took out X in private loans, and I want to get these private loans out of my way. I know for my PSLF bucket, I'm just going to follow the rules. Whatever my income-driven payment plan is, I'm going to pay that amount. I'm going to certify my income every year. I'm going to certify my 12 payments. So just get organized. Find the best rate for the private loans. Have a plan in place for your federal loans. Make sure they're organized. Make sure you have the proper payment plan. Is it pay? Is it repay? Is it old IBR? Are you doing married filing jointly? Are you doing married filing separately? Understand by just getting organized and putting a plan in place, just like any other part of your financial plan. Your student loans are an area that you have to research, organize, and get a good plan in place. And I'll be the first to tell you, for some of our newer clients, one of the biggest value adds we can find is just discrepancies inside of their student loans. Were they in the wrong payment plan? Could we do something better with this federal loan or this private loan? There's a lot of value to be found inside of getting just your student loans organized. All right, as we start to come down the home stretch here, I just wanted to give you some examples of what student loan payoffs could look like. Now, for the most part, this is going to be based on private payoff. I didn't put any numbers in for like, hey, what would your payment be if you're going for PSLF? But sometimes I would say half the battle is just knowing, right? So what I did was I put Dr. Smith, Dr. Lee, and Dr. Scott as just examples. Dr. Smith has $300,000 with a 7% interest rate. Dr. Lee had $600,000 at a 6% rate. Dr. Scott has $150,000 at 5.5. And then all I did was list what it would take to pay them off in 5 years, 10 years, 15 years, 20 years. Because I think sometimes we just don't know. And truthfully, 7 and 6, even 5.5, depending on what duration you're looking at, might be a little bit higher. You know, we're seeing a lot of our physicians, again, late 2021 right now, on a 10-year loan or less, getting, high 2s, low 3s. Now, again, it depends on your credit history, your credit score, things like that. So that's not like a broad stroke of the brush, but just know that. But we wanted to at least give you some examples. I won't walk through the actual payment amounts on this video. We'll just have a link to the actual blog post and then scroll down towards the bottom. So with that, again, I know I kind of noted this earlier, but student loans are probably one of the more complicated parts in our financial plans right now. And it's sad that I have to say that, right? It's sad that student loans have become this complicated, but the complications also lead to areas for optimization and areas that you can save money or knock off a year or two or lower this interest rate, or, I mean, just the amount of clients that we finally talk to and say, listen, public service loan forgiveness is like built for you. Like, you should be taking advantage of this. This is why they created this program. And then them finally hearing that and then saying, you're right. How let's do this. Let's go after public service loan forgiveness. I'm probably already 5 or 6 years in. I just never trusted, or I didn't know enough about it. Or, we've had some physicians say, I didn't think it pertained to my specialty. Like crazy things. I don't even know where they're getting some of these facts, but it just goes to show you that there's been no education on student loans. Just like there's been no financial education for any of our physicians through their medical school, through their training. Out of all the topics, student loans probably should have been like embedded in there somewhere. Even if I put aside Roth IRAs and 403Bs and disability insurance, student loans probably pertain to what? 75, 80, 90% of young medical professionals. So it's a huge part. So I hope this helps. But just understand the actual landscape of student loans is, one, not only has it changed dramatically in 2 years, it continues to change. So keep an eye out there for headlines. Even as I'm recording this video, we assumed that we were going to start paying loans back at the end of February. Now we know that federal loans have been pushed out the whole way to May now. So it's continuing to evolve. It's a big part of the financial plans. Even if you don't have a comprehensive financial planner or a CSLP like myself or my team here at WealthKeel, look for some of the other resources out there. White Coat Investor has just a student loan section that you can actually get your student loans analyzed. Check out the student loan planner with Travis Hornsby and his team. Even if you don't need to do anything financial planning based, there's still really good comprehensive resources out there just to get you on the right track for your student loans. And that's it. Your updates for public service loan forgiveness and student loans for 2022 for our physicians. If you have not already done so, please like this video. That'll help this video. If you're really feeling good, you can click the subscribe button. And if you're feeling great today, you can also hit the bell icon. And the bell icon will give you a notification anytime we send out a new video. And as I said, and as you probably know, unless this is your first video, we work with Gen X and Gen Y physicians. And unfortunately, the group that we talked to was not taught anything about personal finance in their very long training career. So anytime we get a like on our video, subscribe to our channel, a notification, click there. It helps us get in front of more physicians, especially on vital topics like this, student loans and public service loan forgiveness. So we appreciate the support. As always, thanks for tuning in, and I will catch you on the next video.